So a stop order on Coinbase is technically a stop limit order because it combines the features of a stop and a limit order, which is a good thing. Let me explain it very simply. A stop limit order allows you to specify a price below the current trading price that if the crypto price falls below the specified price, it will trigger a sell limit order. This is helpful if you are up a lot of money and want to ensure that your profit doesn't dwindle past a certain point. And conversely, if you are at a loss on a crypto investment and you fear that it might go even lower and lower, you can limit your losses by specifying a price that you wish to sell at if the crypto investment keeps bleeding money for you. So let's say I purchased a bunch of Cardano when it was just $1. So right now it's trading at almost $2.50, which means I'm up about 150%. So let's say I'm okay with the price action occurring and I hope it's going to go up, but what I don't want to happen is I don't want it to eat away past 100% of my profit. So I at least want to make 100% of profit. So what does that mean? Since I bought it for $1, I don't want it to go below $2. And if I don't want to just stay awake and stare at a screen all day, I can ensure this by creating a stop limit order for selling Cardano. And how do we do that? So we go over here to sell. See, there's a buy and a sell. We click on sell, we click on stop. Now, the stop price, since I don't want it to go below $2, I'm going to set the stop price a little bit higher. So let's say 2.01, because remember, for a stop limit order, as soon as it crosses $2.01, if it goes down, so right now it's $2.45, if it skids all the way down, as soon as it hits $2.01, it is going to trigger a limit order. And the limit price, I'm going to set to $2. There can be a smaller spread between $2.01 and $2. Like I can make this 2.09. And this will ensure that the limit price, it's going to sell for $2.009. The reason I like to leave a little bit of a spread between the stop price and the limit price is because sometimes when things skid, they gap down, and what can happen is it goes past $2.01 and goes right past $2. Maybe everyone else already had limit orders in and it fills those limit orders first in the order book and you won't get filled. And so for amount, you can specify how much ever ADA you have. So if I click maximum, I have 4,203 ADA in my account. And then I could simply go to place sell order. And right here, it shows you the fee. Now, Coinbase Pro, it does have a little bit higher fees than some of the other exchanges, but I still highly recommend it because for me, it's been extremely reliable. And I personally consider it a very, very safe place to hold my crypto. So I go to place order. And if I take a look, I could see my order right here. So stop at 2.01 and it's going to be a limit of $2. And right now it is active. And so I can go to sleep calmly and not worry about a thing and stare at the screen all day. Now let's talk about another example of why I would want to do this. Let's say on this latest run up, because there's been a lot of buzz, a lot of momentum behind Cardano. Let's say you purchase Cardano at $3. Now it's trading at $2.45 and you are sitting at a loss and you're sweating a little bit and you say, you know what? I'm okay losing a couple of grand, but I definitely don't want it to go below $2 because that would be me losing way too much money. So what you can do is you can place this exact order. And so in the first example, I explained that you're stopping the bleeding from your gains, but here you're technically stopping the bleeding from your losses. And this is why it's really, really helpful that you can just set this and forget it. Because remember, crypto, it trades 24 hours a day. And if you've been trading crypto, you know that crazy things happen at 2 a.m., 3 a.m., 4 a.m., sometime when you're sleeping and you don't want to wake up and be like, oh my God, I just got royally screwed. And these are the reasons that you would use a stop limit order when selling. Now let's cover why you would use a stop limit order when buying. So sometimes some traders, and this is a little bit more of an advanced strategy, but they feel like right now Cardano's trading at $2.45, but they're sure that if Cardano surpasses $3, it's going to rip all the way to $6. For some reason, some technicals are showing them that, some chart patterns are showing, they have conviction that Cardano after $3, it's going to hit $6. but they don't know if it's going to reach over $3 tomorrow, if it's going to reach over $3 a month from now, 6 months from now. So rather than just sit there and stare at their screen all the time and set alerts, they can go ahead and they could put in a buy order. So what they can do is, if they feel like Cardano's going to show some serious upward momentum once it hits $3, they could put a stop price of $3 and a limit price of $3.01. So what does this mean? Remember, a stop limit order will automatically post a limit order at the limit price when the stop price is triggered. So if Cardano hits over $3 or $3, then you can have a limit price of $3.01. And then the amount of ADA you can specify here. So let's say 500 ADA. This means that if Cardano surpasses $3, this exchange is going to open up a limit order to buy as long as the price doesn't exceed over $3.01. And remember, the reason we do this is because there can be a huge gap up in price. And if you set the limit price way too close to the stop price, nothing might happen, because there might be other people ahead of you in the order book that have placed orders and your order is not going to get filled. So I always suggest at least a penny. Leave a little bit of room between the stop price and the limit price, because remember, you can make this decimal points. You can make this 3.0001. So again, why did we do this? Because we're waiting for Cardano to show some serious upward momentum, and we believe that's going to happen if Cardano surpasses $3. Now that I've explained two situations in which you would buy and sell using stop limit orders, I want to show you this chart for a second. If you've been trading crypto, you've probably seen charts like this happen quite a bit. And so now you can understand why something would gap down so far and then shoot right back up. So with a chart like this, what you have to realize is the reason it goes down so low and then shoots right back up is because someone over here, a big whale, decided to sell a lot, or maybe some crazy news came out and everyone started selling, and normally would have gone to here, but it triggered all of these stop limit orders that were waiting to sell if it hit a certain point to stop their losses. And so what happens is it keeps hitting these stop orders, and it keeps hitting them, and it keeps hitting them, and then it shoots back up because it's filling orders as well, and people are taking advantage. Because remember, you can set limit orders. Like if something dropped to 14,600 here, then all of a sudden limit orders that were sitting around that price, they start getting filled, and so it shoots back up. So in the markets, whether you trade stocks, whether you trade crypto, Cardano, Bitcoin, Ethereum, you know that when news comes out, when there's crashes, when there's really momentum going to the upside, you know that overselling and overbuying, overreaction is the name of the game on the stock market. And what you want to do is you want to take advantage of overselling or overbuying. And some of these strategies using limit orders, stop limit orders, that can help, but it can also hurt. Because think about it, someone, if they didn't have a stop order set at 14,600, if they just waited this 10 minutes, hour, however long this period lasted, they would have been right back where they were. But because they had a just in case order, this skid all the way down, it sold for them here, and then the next person was able to buy it and it shot right back up. But because the crypto market, stock markets is so crazy, it's such a ruthless game, you never know. The stop loss order might have been really good at 14,600 because this could have gapped all the way down to like 10,000, 9,000, 8,000 and stayed there. So please do remember, although you can do a lot of research, although you can have a lot of conviction, this is all just a game. It's people buying and selling, buying pressure, selling pressure. That's what dictates price. It's a game of psychology, it's a game of research, but it's also a game of discipline, patience, and having nerves of steel. So I hope you guys learned something today. I hope this was helpful. If it helped you understand why people buy using stop limit orders or sell using stop limit orders, please let me know. And if this video helped you, please help me out by liking, commenting, subscribing, sharing the video. I appreciate you guys a lot, and I look forward to making more videos. I'll see you in the next one.